Hey Thor, how's it going?
Sorry. I had a phone call came in and I wasn't paying attention and I saw you pop up on DM. I said, "Oh my God, I forgot again."
Yep, no,
Anyways,
we're good. So I have everything recorded. This is Thor, who you just met, and Cedar. And between the two of us, we've been trading actually, is it 55 years? How long? What's your technical date? Are you 30?
I
I'm
don't
21
I honestly
and some
I've
change.
honestly kind of lost track. I It was 30 plus years a few years back, so
Yeah, I feel like it's
it could
34 or
be
35.
35 now.
Yeah, somewhere in there. So 55, let's call it 55 if you're 34 and I'm 21. We've been trading for a long time. We've both taken what I call, and this is, please don't take offense to this, trips to the spanking machine at an excessive rate, lost a huge amount of money between us individually. And what the net out of what we want this charting session to be is that you learn how to look at things, not what to trade, but how to look at things, how we see them. And sometimes our view is a little different, even though we have completely different backgrounds. It's our levels are uncannily similar. It's just good TA, right? And we use different ways to arrive at that. But for me, it's all volume. For Thor, it's all volume. We just have different ways that we actually achieve those numbers. And so we're trying to give you some insight as far as that goes. Now, I have the Tesla Daily shared right now just because that happened to be what was on my screen. So let me make sure I've got recording. Okay, good. I've got volume on everything. I had one that I recorded that didn't have volume. It was one of our short ones, but there was no volume on the recording, so not so much of a reason to post it. So we are good to go. Let me pop into the channel. And I know I had somebody DM me some tickers before the holiday weekend started. And it was a long-term investment question, not a even like commons position for swing trading or anything like that, but like I'm looking to add to my investment portfolio. Can you give me an idea of, which one you would buy between the two? And I said, please post it. And I do not see it. So I'm going to go back through my DMs. Is there any, because I know you've been posting about VXRT, Vaxart. So when you posted it, I laughed because I traded that as a bio from 2019 into 2020. And it was because my husband said, hey, I'd like to take 5% of our portfolio and start dropping it into some biotech, which I am not a fan of. I haven't held biotech. I maybe like 0.5% in my entire trading career. I may have dabbled in it a little bit in like 2006 and then got burned and was like, nope, not touching it. But it was not very much, like not even remarkable. And Vaxart was one of them. And I did super
Yeah,
well.
biotechnology is a
Yeah.
tough one
And I
to.
drop
The
kick that
XRT
thing.
just came up on my screen because just if you look at it, anybody can see that over 85 it can go. I mean, the chart just screams that it's going to do something. But then it goes over 85 and you think it's going to run and then something happens and it could come right back down. Biotechnology is like that, but I really like that chart. I'm watching it really close.
So I bought it back in this flat zone in 2019. And so I bought it somewhere at like 71 half or something like that. It dipped down quite a bit. And I was like, well, it's only a 0.5% position, right? Because we were putting 5% total of the portfolio. So I picked 10 biotech stocks. And then I was like, I'm just going to close my eyes. And if one of these 10 do something, it doesn't matter about the rest of them. And it turned out Invax also did very well. And so I actually closed it. Let me see. I feel like I closed it actually in early to mid June. It was like $7, 6.98, something like that, which is why you go smaller position sizes. Because there were a couple of them that I lost like 50% on. But if you go from 70% to $6, or from, sorry, 70 cents to $6, things are pretty reasonable, right? Even if you're losing some of the other positions if you're not oversized. So now moving into where we're trading right now, if you look at it, we actually found a bottom. And I didn't even look at this because I saw you talking about it, but I came in, my flight was delayed last night, so I actually came in way later than late was even going to be. And I was like, I'm just going to let everything open and kind of see what's happening, and saw your posts. And so now looking at it, our volume point of control is just overhead, 1.06, which means that's probably where we're going to sell. And what I would say is we happened to get lucky coming into January 2020. My husband knew that there was something going on medically in China and said, just hold on to the bio stuff. And I bought it. It had to have been Q3 2019, just because it was like, oh, I don't have any representation in my portfolio. So now that I'm seeing this volume point of control, despite all these big spikes, and you have to think about this, this is a penny stock that was not a penny stock for a little bit, but I lop off everything that happened in COVID when I'm looking at it, and I'm going, all right, I have charted this. So overhead, $1.09. There's a little bit of volume at like 126. And then over this is the 150 and 220 range with pretty easy room to 276. But that's presuming we make it all over the volume point of control just over $1. So I'll post my charts. I don't think you and I have talked about this before, but I definitely charted this for someone somewhere.
Yeah, I actually posted my chart there just a few minutes ago.
Awesome.
In fact, I'm going to post another one that because I drew some trend lines. Maybe I'll get rid of the one I posted and put another one in there. Yeah, that's what I'm going to do.
All right, I just found the DM, so let me pull up those tickers. It was a choice between CVS and PFE. So pharmacy versus Pfizer stock. I can personally tell you I will never, ever, probably ever touch Pfizer stock again. It did great. CVS is more healthcare based, more, retail kind of edge to it. So I'm going to start with Pfizer. I have not looked at Pfizer.
Which one are you looking at?
Pfizer, PFE. It's Pfizer.
I don't see those tickers in Lunch and Learn.
No, they're not in Lunch and Learn. They came as a DM, and I asked her to actually, well, I presume her female profile picture, I don't know, to post them in Lunch and Learn, and they were not posted. So I just went back to my DMs and tried to pick through them. So
all right, I'm in Pfizer now.
okay, so Pfizer had a big push in 2018, which was a Chinese crisis, right? There's our 2020 dip into March, and I will let Thor go into what his opinion is, because I am not a bio, I'm not a pharmaceutical, and I'll just give my chart analysis because I don't have anything charted up here. As far as at levels, which they can see if they're watching my stream, they can actually see what those volume profile levels are, then I would be just marking in. I'm going to go ahead and do that while you are giving your ideas.
Yeah, I don't like it. Straight up, I don't like it. As soon as you look at it, you can see it's still downtrending. There's no, you're looking for it to, it's possibly this last spot at 35.38 the other day could be the stopping point, but it's still overall in a downtrend.
And what time frame are you on? I'm on weekly right now, dropping in volume levels.
I'm on daily.
Okay. Have not even
I'm gonna
gone
go to weekly right now to see if I can see anything. I don't even see a trend line break here.
Yeah, there's no real, it's like wall art almost. But I'm marking the levels that are showing up in every bit of price action that we have left from where we are right now, and actually a little bit below it, because I want to see what that volume is. So looking below, the 3632 level was the highest volume area above, where we're kind of just some contention around. So we had a little bit of bounce, some front running of some short covering, which is guaranteed buyers, the shorts, May 15th, 2023. That's the week of May 15th. And then we've really kind of been tangoing all around that line. This was an earlier lower volume area, because we've got an okay amount of volume here. It's not a bunch on the weekly, but we're putting in some volume here. If we don't hold 3461, then we've got a pretty quick trip to 3306, 3236. I wouldn't touch this for my long-term portfolio, with, and I hate to say this, somebody else's 10-foot pole. That's the term I use, except I won't trade somebody else's money because I'm not going to take that responsibility. Like, I'll trade my money, tell you what I'm trading, but I feel like I'm managing the risk, and I would feel terrible if I lost somebody else's money. Like, just is not something where I'm willing to go to. I wouldn't touch this with my family's money. I wouldn't touch this with my money, anyone's money.
No, as a matter of fact, I have a little bit different number than you as far as a failure. I think that if it closes under 35, it's gonna fall.
My big number is 34.46. If it closes under that on the weekly, it's really going back to volume point of control. So I'll mark that on my chart. Volume point of control is 27.48. Now, does that mean I want to short it with all the like new strains of COVID variants? Who knows what the manipulation is of what all of the media is doing and all that stuff. And I don't do politics. I don't do media. I literally don't. So this chart could be one of those that pops in weird directions. And if you're good at swing trading and you're good at taking the risk, so, you know, 0.25% kind of position, and if it pops $5, you made money. That's just not I don't trade that way at all. I would not touch it. So.
Yeah, I have no interest either. I'm just saying that
Yeah.
if I was gonna do it, I'd look more at it for a short under 35. That would be a hold under 35, a close under 35.
All right, Chevron, I'm going to go out to monthly. So I want to just peek at this monthly because I haven't looked at Chevron in 2020 on the lows when everything was just, you know, like oil was negative per barrel, like you actually had to pay somebody to take it. I had my son and we, of course, bought XOM at 32 and some change. It was under 33 and sold it at like 85. Totally happy with that kind of return. Chevron was something that we looked at back in that range, but I didn't like the chart as well. So I'm going to try to look at this chart from a unique because I haven't really paid much attention to this chart in the last like year and a half, 2 years. So looking at it from monthly, if I go straight volume, our next high volume node is at 159.51. So if I were looking for a buy-in, that would be a dip buy kind of situation. And if you lose that, let me flip out to the weekly now and decide if I like that. I have to change my color. So I use purple on monthly and blue on weekly. So purple's more serious. But if the same number shows up on weekly, then I leave the purple. Okay, so I probably would put a buy order in at that level, 159.21, and consider, just because oil, which I'm not a fan. I have 2 diesels and 2 gas trucks. We have 4 trucks total in our household. So obviously I clearly like oil because I spend $1,000 a month in gas, give or take. However, it's not going away. We're not finding new deposits at this point, but Chevron is a little bit behind XOM, but Chevron is finding new resources, new ways to invest. So the reason we bought XOM to begin with was because those two, Chevron and XOM, so CVX, XOM, both seem to be spending a little bit more time in alternative energy sources and other realms to make money, as opposed to just tanking with some oil and gas, you know, kind of potential. Like there was no room down on the other ones. These guys, no room down and lots of overhead. So if I had to choose between Pfizer and Chevron, I'm a straight Chevron here as far as long term. Now, and that was the question. That was the direct DM. If you had to choose, or if you were going to choose between the two, which would you choose? So my answer to that DM is Chevron. However, I can't buy a chart that has been this sideways for this long. So what are we, 18 months on a long-term investment portfolio, because I have better ways to put my money to deploy that capital. So there's my story. None of them, but Chevron is stronger.
Yeah, I'm not a big player in these kind of stocks either. I mean, you might as well leave it in your savings account. You're going to see it move about the same.
And there is some
Joe,
dividend, I believe, on
but it
Chevron.
feels like that.
Let's see. Let's
If I were to buy Chevron, if you're someone that, you know, you're sold on it, or you're looking to get in, I would try to buy it on a bounce at 164.
Okay, so you're a dip buy a little bit earlier, and I can see, looking at the weekly, I can see what you're thinking, and the only reason I'm lower than that is because of the volume that's below it, so we could wick down there. So I see that. Let's look at
No, the only reason why I'm saying 164, if it didn't have that gap up, I wouldn't even look at this at all. It'd be a non-play for me. But
right.
that gap up over, in fact, it gapped twice.
Yeah. No, it's got some interesting interaction there. I just can't touch it there. I totally see that. Those candles. So for those of you looking, I'm going to go ahead and zoom in very tight here. I call them scary candles, very tall candles. It's really this, we've got wicks and candle bodies galore, but that also makes me go, I can't touch it. So yeah, I see it totally, what you're looking at.
Would I do it? No.
No. Okay, so earnings October 27th. And do we have any? Yeah, no, I can't. All the way around, every way I can look at this is just nothing.
Yeah, the one thing it does though, it does look like it's trying to break out of that sideways action. So I mean, it depends on how far it goes. At least it's making an attempt. But you know, when these oil stocks, when they break out like this, they don't go very far. They just don't. They're not built to go ballistic. They just kind of make a little run and then they'll go sideways again for a while. That's why I don't play them.
Well, and that's sideways. It could be for a while. When he says for a while, let's zoom out for a little bit. It could be for like 8 years. Okay, 5 years. And are you okay with sideways? In an investment portfolio, probably not. So we had basically the same trading range from 2016 all the way through 2020. And that is not a huge dividend, not anything. I would not park my money there. And that's why Thor just said savings. So I'll go ahead and post this chart. And this is more time than Thor or I would either have spent on either of these two charts. But we're trying to verbalize what we're going through mentally and, you know, what we're looking at, and just kind of tag team back and forth.
I mean, we both have different ways of looking at it for sure. And we're usually within the same area. So one of us could be earlier, one of us could be later.
It's remarkable because we do come from very different backgrounds. Thor actually ran a site in, was it the 90s? Trading spreads.
Yeah.
I know you're not happy about talking about it, but like he's been doing this much longer, to the tune of 14 years longer than me. So, you know, 67% longer than I've been trading. So we come from different places entirely, but my approach is volume, using different methods, anchored VWAP, using a VRVP so it can be visual for members to be able to see what that is, not just the candle structure, but Thor's looking at straight volume. But it all does go back to volume. Volume is king. Price action, where the interactions were, are critical.
Yeah, I actually didn't look at volume on Chevron at all.
No, you just looked at candles.
Yeah, I mean, for me, volume does mean pretty much the most for me.
Yeah.
But I don't use it until the end when I find something I really like, and then I look at support, resistance, I look at candle patterns, basically wick rejections up or down. And then I'll look at trend line breaks, I'll look at trend line holds, and then after I look at all of that, first I'll look at the chart, and before I put anything down, I look at the chart, I know whether I like it or not. And what I do is I start laying down all those technicals I'm just talking about, but I don't use
So you're not using volume
RSI, I don't use MACD, I don't use
on the
any of
higher
that
time
stuff.
frame. So there's no
And then what I
volume.
do is I go to, at the end, once I have everything laid down, I'll look at volume to see where volume is, and then I'll look and see when I think volume's gonna start coming in, and then I'll look for volume when it starts getting to my points of breakout or bounce or, a trend line break is all.
And
That's when I
so
really look at
is
volume
the
and
volume
start to
on the
convince me.
daily that you're looking at? Because that's, so I start with volume. My volume starts on the monthly, and that is the moving averages, which are delayed, but the volume profile where we've actually traded, as we've traded in that range, is my primary start place. And then I actually, once I get to daily, I drop off, unless we've been trading in a range for a really long time, then I will drop off the volume on the side. So the volume profile, which is what you see, the sideways mountain, the only thing I leave up is the volume underneath from that perspective. But that's interesting. I did not know that. And we've been doing this for quite a while now. Kind of cool.
Yeah, I don't use volume last per se. I mean, sometimes a chart
Yeah.
will catch my attention because of volume, but that's not the first thing I look at. It's actually the last thing I look at when I'm wanting to, verify the chart that I'm looking at.
And see, I use very few trend lines. I'll use them if I'm, I see kind of a pattern that I'm trying to show to somebody. I use more horizontal lines based off of the volume than anything else. And what we're trying to discuss now is not that either of us are right, because we both come to a very similar, it's almost eerie, a very similar kind of set of levels. So there is not a one size fits all. There's not something where you can, like, if one of the traders resonates with you and you're like, no, that makes a lot of sense. And every time I'm thinking, yes, that's a long entry. Yes, that's a short entry. And there they are taking that trade. If that aligns with what your personal trading style is, that's what you should be doing, not what just somebody else who's successful or been trading for a long time, but it's for you. Does that make logical sense based on how your
Yeah, I mean,
brain processes and what you can execute?
Cedar's right. I mean, a lot of times it's what fits your eye,
Yep.
what you're comfortable with. For me, I just a long time ago, I got tired of getting unconvinced because one of my indicators said that, well, no, it's not going to go, or it's not a good short. So I got rid of basically everything. So my judgment's not clouded. Once I see a chart, once I look at my indicators, I don't look at anything else because I don't want anything clouding my judgment as far as where I want to get in or out. If I'm wrong, I'm wrong. I got my stop set and I'm out. If I'm right, I'm right. I just don't like to be. I just don't like to be looking at something and I'm looking now at a cloudy chart because one of my indicators said no.
Right. And that's where, when you see me streaming, it's the same idea. It's a pretty minimal chart. I've got white candles and some resistance lines and a few trend lines. I flipped over to ES just now so I could see what my bigger view trend lines are. And we're holding that 45.11, but it's based on candles. If we look straight across, it's the same idea. And people ask me for the ES all the time, and I'm like, no, it's literally everything I post every day based on that. But if you're looking at your chart and you can't explain it to somebody who just started, let's say they've been introduced to what candles are and basic price action, if they can't understand it, if it's too confusing, you're going to start to get distracted or biased by it, which is why I use my execution charts, which are anchored VWAP, and my heavy levels. Like, these are the intraday trading levels, and I day trade a lot, where Thor day trades some, does a lot of swing trading, a lot of commons trades. But we always have to be able to pop into these. So these are some of the charts that I always have up, that I'm always looking at to see the bigger picture. And Thor has just graduated to that point, and I guess the word is graduated, I don't know. I still like to be able to see those individual nuances of anchored VWAP on the individual days, which is volume weight adjusted price, where the most volume in the last session for ES, especially for futures, which is like what I trade the ETFs off of as well.
You're more detail orientated than I am. You're a detailed person anyway. So, using all of those indicators fits your personality because, I've known you for a while now and I've worked with you, looking at DMs and also on the backside of everything here, you are absolutely detail orientated. So,
Well, and I want to be able
this
to
is,
teach people how to look at it. So that's my biggest thing is when somebody says to me, how are you seeing that? This gives an expression that is the least confusing way, at least with the blue background chart of what that bigger picture is. Because hopefully you don't take as long as either of us did to learn how to trade. I'm going to cross my fingers now and be like, please don't take that long. Because I had 2 years of losses, 1 year of break even.
yeah, you did better than me, but I'm
It
sure
was a
you heard
lot.
me groan right when
No,
you
it
said
was
something about
it
losses.
was a lot. It was a lot. It was
Yeah,
more,
me
and
too.
I didn't respect my capital. It was an insurance settlement, and I would be in a very different financial situation. Although I would say that had I not lost that amount of money, maybe I wouldn't be. Maybe I would not be in this strong financial situation because I wouldn't have been scared out of my literal shoes, out of my shorts. I'd like scared, like I can't climb out of this. And I'm not that person that gives up. I'm like, well, I guess I'm figuring this out.
Well, the biggest thing, I was talking to somebody this morning on DM, and the one thing I see people make mistakes at is I'm still humble when it comes to stock trading. I know at any minute
Oh yeah,
I can make a
you're
mistake, and
wrong.
I totally,
Yeah.
you know, I see the cockiest people are the ones that end up failing.
They won't be here next
They
year.
think
Yep.
yeah, they think they got it. They think they're the king. They, yeah, I'll say something when I'm right because it feels good. But I say all the time that I absolutely do not get too cocky about it because at any minute I can have PDD
Yeah.
hit me like it did.
You're only
And
as good as your last trade is the thing you have to remember. The more somebody says they're great, and this goes across the board. This is not just trading. The more somebody talks about how good they are, the less likely that is to be true. And so confirmation and not, like I called both directions and now I was right one direction and that tweet was deleted, that was the other, because that happens all the time on FinTwit. The more somebody has to say or has to tell you how good they are, just perk your ears up and just watch. Just watch, because some people do have
Eventually
too big of an Evo.
they get caught hard.
Yeah, but most of the
Yeah.
time it's it's an indication of who to watch fall. So it's Icarus to the sun. So just stay humble and go, if you're not humble, and Cruz and I were talking about this last week, if you're not humble, you're going to be humbled. But if you want to be around, if you want to actually turn this into a real profession that is a secondary business for you, maybe you're wanting to trade full time. And I usually heavily recommend against that until you've been trading for a year or longer, making three
Maybe
times
longer.
your income, 3 times over a rolling 12 months. So, if you're making, let's say you're making 90 grand a year, it's a sizable chunk to take a portfolio and make 3 times, right? 270 grand, and you have 12 months of savings. So those are my parameters. Until then, you should be trading on the side as your side gig or as you're opening a new business. And I would honestly say, I run 2 companies. I own 2 companies. I work very part-time in one of them, and I trade full-time because there's no reason to put all your eggs in one basket. It's totally fine to be able to hop back and forth. And not every profession, like there's a lot of professions that are 50, 55 hours, 60 hours, like full-time, that you would be part-time in trading. However, there are positions that you can take that are what would be considered gig work in your field of expertise, not trading, in your field of expertise. Once you have decided I might want to venture into trading a little bit more, that maybe is not a bad thing to do both instead of just quitting your job, burning the bridge behind you, and now you burn through your 3 months of savings that you had set up. So I would heavily recommend that those parameters, 3 times your income yearly on a rolling 12-month average, because markets do change, and 12 months of living expenses, including your travel, including everything. So you don't leave yourself so tight, because then all of a sudden somehow the brain stops working. It's unfortunate, but it is the
I
case.
mean, I'll be honest. I think people that want to trade long term, very few are going to make it. I mean, I'm
Oh,
just
it's
being
very
honest.
few.
I'm just
It's
being totally
5% or
honest.
less.
I
Yeah.
think people they have a romantic thought about staying at home and doing what they want and be able to trade full time. It's very difficult.
It's very
I don't
difficult.
trade for a living. I make my side money trading.
Yeah.
It's not what I do for a living. In fact, I probably have 10% of my net worth in the stock market, and I'm only using, I shouldn't even say that, it's in a trading account. 10% of my net worth is in a trading account,
Right?
and I only use about 5% of what's in my trading
As
account.
deployed funds. Okay.
Yeah, I just don't do it. I mean, it's just for me, I think I said in my staff intro, the reason why I'm not going to do it anymore. It's the reason why I gave up
It's too much stress.
site I had years ago. The stress was just too much, and it's not worth it to me anymore.
So if you guys hear what we're
Uh,
both saying as experienced business owners, long term, and are you 64? I'm 47.
I'll be 65 in 20 days.
In 20 days. We're calling it 64
20
until it's
18
actually
days.
65. That's it. It's 64. So the point is the stress levels are so much less to be in a position where not all your eggs are in one basket and it's an alternate income. Now, until COVID, it was about 35 to 40% of my income, what my trading was, because I was actively working in my business. I had my swing trades, I had my day trades, but I was spending probably 2 hours, 3 hours a day trading. And then once our fitness business got shut down for almost 4 months, and I was training from home via Zoom and at home because the gyms were closed, I was like, well, I guess I can be trading a little bit more because I'm not answering member questions. I'm not, popping out on the training floor with my staff, different things like that. So that changed dramatically for me to shift it where, while at the time I was trading with about 35%, and I should say my portfolio was funded with about 35% of my investment capital. And I was using about 8 to 12% of my total investment capital available to be able to trade. I actually dropped that in half from options, put the other half in futures. Was it last March? No, March before. So it's been like 18 months. And so diversified that a little bit so I can be trading at different times. But the thing is this is always going to be growing, evolving, changing. And I'll tell you what, the last thing you want is performance anxiety over how you make your rent or your house payment. And there's just not a reason to just go all eggs in one basket. Now, if you're young, let's say that like 16, 17 range to like early 20s, and you don't have a bunch of overhead, you've got some money put aside and you want to give it a go. I guess that's the term I'm going to use, give it a go. You don't have a family depending on you. We can add all those parameters. You have to ask yourself what you're risking as far as your long-term financial stability. And what I did was took the money that I had that was not risk capital technically, it was an insurance settlement, fairly sizable, that I didn't respect because it wasn't my money technically, right? I didn't earn it. If I would have approached that a little bit differently and had the type of like coaching, understanding, training, education that we have here, I would not have lost it all and been in a much better place. So if you're coming into trading and you're hoping to have it be your solution for being able to travel, being able to trade from anywhere, that kind of thing it's very romantic. It's the romance. And it's funny that you use that term because I say that to other people all the time. Well, the romance of this, except the reality is you're going to be sitting behind a desk waiting for the opportunity. The same as you're working on a project with something else. It's just waiting or work time, whatever that is. So when somebody says, oh, I made, 50% in 10 minutes, but they spent 15 hours preparing for that 10 minutes. So it's like a performer. If you've got let's say you've got a Cirque du Soleil troupe that's coming, to your town and you're paying $130 a ticket, you're not paying $130 for the time you watch them. You're paying for their experience and their expertise and their time. And you have to look at this the same way. It's a profession. It's going to take time to build it. Please don't jump into it just haphazardly, and make sure you're taking advantage of education that's in here. And that's part of the reason Thor and I are taking the time to record this. So I am officially at my my time for this one. Thor, do you have anything else to add to that?
Yeah, I'll just make it really quick. When I say people fail, I mean, they don't have a site like this that can help you. I didn't have a site like this that would help me. I
Okay.
learned by failing basically over and over and over again. Here you have people like Cedar and I and Steve Blast or Husky and the rest of the guys here, D Cruz, that can show you the way. And even the people that don't really want to learn how to trade, they are people that know how to trade and they're just waiting for the alerts. They look at the chart, they get in or out. There's a lot of people here that are just doing that.
Yep.
The main thing is to really watch and listen
Oh,
and
speaking
learn
of,
and
let
really
me
learn
let
by
me interrupt
by
very
your
very
failures,
briefly.
because
I'm out
your
of my.
failures are, I'm sorry,
We,
Cedar,
we have a
what?
delay. I'm out of my QQQ calls at 1.07 from 0.57, 0-day 378 QQQ calls exit 1.07 from 0.57. Sorry.
That's okay. I'm finished. Thanks, guys. And please remember to fill out your monthly.
All right, great to talk with you again, Thor. And one more thing that I will mention is Thor and I we're hoping to be able to carve out another half-hour segment somewhere through the week. So if you have anything else you want us to look into, I don't know that another lunch and learn is super helpful, but if it's another charting session or a different style or something along those lines, we'd love to hear that feedback. You can send us to a DM or tag us. Just make sure you're tagging us, not just typing our name, because we, try to search our names as well, but it's a little confusing to find. All right. Thanks so much. Have an amazing afternoon.
Y'all.